Hey guys, welcome back. Now, Michael Saylor is one of the leading authorities on Bitcoin, and he's not just someone who's spent hundreds of hours understanding the topic, he's also someone who's put his money where his mouth is and gone all in. Recently, he was interviewed on Real Vision where he explained why altcoins are going to get crushed. I'll link the full 90-minute version below as it was excellent. I've watched it twice now for a total of 3 hours. But in this video, I'm going to be sharing what I thought were the key takeaways. So in this video, we'll be looking at who is Michael Saylor and why should we even care what he thinks? The new concept of digital property. And then we'll finish with Michael Saylor's altcoin warning, why he thinks the altcoins are going to get crushed. As always, if you do enjoy anything in the video, then drop a like, always appreciated. Okay, so I'm guessing you've seen at least one interview with Michael Saylor already, and you may think he's just that guy that loves Bitcoin. He's just a Bitcoin maxi, right? However, here's the thing, not everyone's opinion is created equal. Michael Saylor does have an incredibly high financial IQ. If you don't already know, he graduated MIT doing rocket science, he's taken a company public, and he's published a book on the mobile revolution before it happened. And so the first clip is 1 minute on why we should pay attention to Michael Saylor. Ready? Let's do this.
Do you know how much how much capital I've invested in Bitcoin at this point, Raul?
No.
$3,335 million.
That's pretty spectacular.
So one person.
Yeah.
But I didn't have $3,335 million in my piggy bank when we last spoke.
Yeah.
MicroStrategy did a $650 million debt offering and paid 75 basis points, but then we followed up with a $1,050 million debt offering and paid 0 interest. And then we followed up with a senior debt offering and we paid 6 1/8 interest on just junk debt. There's nobody in the space that thinks that Bitcoin isn't going up 6% a year. Now, what happens if more than one person does this, Raul? How many people does it take, right? And the answer is you need public entities, and they need to be creditworthy, and they need to be able to file a registration statement. You know, if you can file a registration statement, you can tap the fixed income markets, you can tap the convertible debt markets, you can tap the equity markets. And as you do that, that capital becomes permanent capital.
So he's clearly got a high financial IQ, and he's invested over $3 billion into Bitcoin. Initially, he did a $650 million debt offering, followed by a $1 billion debt offering, followed by another $600 million senior debt offering. And here's his bet. As long as Bitcoin goes up over 6% a year, then he's in the money. Now, he also did an excellent presentation on the different forms of energy and storage, but it was the bit that he did on digital property, which I found the most valuable. And here's the big idea. As we get older, we accumulate wealth. And as we build our wealth, there becomes a need for us to store that wealth somewhere. And for many people, this has been in property. Real estate is one of the top places to store wealth that's been used across the globe for generations. This next clip is about a new and improved 21st century method for storing wealth, as we now have the option of digital property.
So digital property is the ideal property. It's the most desirable property in space and time. Bitcoin is the dominant digital property network. It's the most secure. It has the most durability. It's the most decentralized. So therefore, if you said to me, where do I put my $1 billion such that any rich person on earth will want it and any rich person in the next 100 years will want it? Bitcoin. If you buy $1 billion of buildings in New York City, billionaires in Beijing can't use them. And when the mayor of New York City enjoins you or impairs you from evicting your tenants or taxes your building, you can't pick it up and move it to Monaco or Singapore. So $1 billion of property in New York, or $1 billion of land in Kansas, or $1 billion of houses in Vancouver don't represent as high a quality property as $1 billion of virtual Bitcoin, because Bitcoin can be moved at the speed of light anywhere on Earth. That's the first check. The second check is if you have to hold it 100 years, a building doesn't have a 100-year lifespan. The Rockefeller Center, or another way to say it, it's got a maintenance charge. You have to reinvest 3 to 5% a year every year for 100 years in order to maintain a building. And even if you do that, name one building in New York City that's 150 years old that's commercially viable today. The useful life of a building, not that great. How about the land underneath the building? Better. Buy blocks of New York City, and that'll be good for a while, but you've got a property tax on it. So imagine having the neighborhood, the mayor, the governor, every regulator in the United States, the White House, and Congress all deciding whether or not they will impair your asset or your property every year for the next 100 years. The basic principle is this, Raul. Bitcoin is the apex property of the human race. It's the hardest to impair. Yeah. It's the hardest to seize. It's the hardest to tax. It's the easiest to move. When you have $1 billion of property in Beverly Hills, and when the governor of California decides to tax it, how are you going to move that to Miami Beach?
So an apex property that's not tied down to a physical location, property that's the hardest to tax, that's the hardest to impair, that's the hardest to seize, that won't crumble away in 100 years, and you don't have to manage things like tenants, etc., etc. So he clearly knows how to build a powerful case for Bitcoin. Okay, time for the main event, and probably the reason why you clicked on this video. Unfortunately, Michael Saylor also thinks that the altcoins are going to get crushed. Why? Let's find out.
Look, if you look at where Gensler is going, and where the regulators are going, they're going to regulate the stable coins. They're going to regulate the DeFi exchanges like Uniswap. They're going to put more regulation on the offshore crypto exchanges. Gensler says this to the Senate yesterday, I quote, "If it stays outside of the public policy framework for AML, tax compliance, and investor protection, it is not going to long persist," unquote. I think that's pretty clear what he's trying to tell you. I think the bottom line is there's a lot of regulatory cleanup to be done, and as it happens, you're going to see a shakeout in the crypto industry. Raul, a year ago, I told you sell your gold, buy Bitcoin. I don't think I was wrong. Today, I would say sell your altcoins and buy Bitcoin. The conclusion is you should sell the altcoins. Everybody is overestimating the potential of the altcoins, and they're underestimating the potential of Bitcoin. The value of true digital property that is decentralized, that is a commodity, that is within the regulatory framework, is huge and underestimated. And over again, what the regulators are telling you, like these are direct quotes from Gensler yesterday. Stable coins may well be securities. Some tokens are commodities. Many of them are securities. DeFi is decentralized in name only. There are 6,000 projects. While some of these are commodities, many of them are securities under the law, and many of the platforms are. That's what he's saying. He said it 4 times. And he's not wrong, by the way. The people that are going to be the big winners are going to be the ones that have the publicly traded traditional financial fintech companies, because they can harness this. The ones that are going to suffer from the liability are the ones that are attempting to create their own coins and their own exchanges without filing with the SEC.
Michael Saylor clearly has a very high financial IQ. He graduated MIT doing rocket science. He's taken a company public. He's used several financial instruments for raising hundreds of millions of dollars, and he's invested over $3 billion into Bitcoin. He believes right now everyone is overestimating the potential of the altcoins and underestimating the potential of Bitcoin. He says the value of digital property that is truly decentralized and works within the current regulatory framework is huge. It looks like the SEC is going to lay the smack down on the altcoin industry, as most of them are going to get reclassified as securities. As we all know, the crypto market is very sensitive to bad news, and the judgment day for altcoins is approaching. So I think the question is, do you have patience? Because yes, altcoins could take a big hit when they get reclassified and have to register with the SEC. And they'll then have to dot all the I's, cross all the T's. But I do think the big altcoins will recover, but it could take months. So to wrap up, if you don't have the stomach or the patience for another big drop, you may want to increase your allocation to Bitcoin, as the SEC chair, Gary Gensler, has said that Bitcoin is property and not a security. So it should do pretty well in this big security shakeup. So there you are, guys. Tell me, what do you think about Michael Saylor's warning? Do you think he has a point? Let me know below. For now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does. If you haven't yet subscribed to the channel, then click below and join us. Got some great videos coming up that you don't want to miss. Okay, cheers guys. Thanks for watching, and I'll see you in the next video. Bye for now.